Alright guys, so I haven't done a video in a while. I've been buying and watching stocks and analyzing them. So basically the whole market's on a on its knees, basically, literally. That's the best way to put it. Whatever stock you want to look at is just gone downhill. Like JD, look at JD. It is plummeting basically. It's gone down to almost one all-time low for the year. Fine, that's fine. I probably will buy more shares into that particular stock. So the reason being, I'll probably buy more shares of this stock because the risk to reward is far greater in this stock than other stocks, for example, right? And it's cheaper, so I can afford to buy more shares. End phase, I'm going to leave it for now. I'm not going to touch it purely because a big lesson learned today, massive lesson learned, which is if you look at my stocks, I've got too many stocks, way too many stocks. I've got over 70 stocks here. Is it 70? Let's have a look. Sorry, 60. It was over 70 before, actually. I reduced that to 60. Still too many stocks. Because what I'm trying to do is, you see SPGI, Global, Tesla, Samsung, Microsoft, Apple. These 5 stocks are my 5 biggest stocks, as you can see. And my position within those 5 stocks, I don't feel they're exactly safe in the short term. Long term, they're safe. Yes, that's fine. They're solid companies. I'm not worried about bankruptcy and that. I just don't think I'll make a quick profit. Basically, it'll take me longer, maybe a couple of months, maybe even a year. But there will be a profit, or maybe even 2 years, I'll make profit. So it's not like a loss in that sense. But what I wanted to do was get a profit in the short term. And that's not going to be possible, partly because the market moved when I changed my mind. Sorry. So as I was saying is that the market moves. So what I'm trying to do is I'm trying to watch the market because we are in a bear market and it's going down constantly. There's a lot of, I mean, it could go down further. I've looked at the technical data. The technical data is telling me that the market could go down further. For example, Tesla, for example, if you look at Tesla, where is it gone? Tesla is down quite a bit. Its current price is 232. However, it could drop to 220 potentially. My position is 255. It's okay because if you look at the graph, the Tesla stock did reach those figures previously, and it could go past it as well in the future. So I'm not worried about it. I feel it's a safe stock in where it is. Where my position is quite safe. However, like I said, if I look at S&P Global, this stock, as you can see, in a year time, it only reached it once, and that's when I purchased it, when it dropped from that peak. As it was dropping, that's when I purchased it. And yes, it's okay where it is now. I think where it is, it's safe in a sense that when it rises again, it's likely to go past that figure. And if you look at my overall loss, it's only 3.4%. So another thing I could do is buy more shares to bring that down closer to the current line. Now, the reason why I'm not buying more shares is because I'm not sure whether it's going to go down any further. It could go down even further. It's not unheard of. Again, it all depends on the American recession news. So I'm waiting on that particular news. But I'm on the sideline at the moment. I'm sitting back and watching them. I'm happy to do so purely because of the fact that it is less risky. If it drops more, I'll buy more. Then that bar, my average bar of currently 403, will and should drop much quicker and much closer to somewhere here if it drops further. Hence the reason why I'm going to sit on the fence on this one. Stocks like Rio Tinto, if you look at overall 1 year graph, now it's on a drop. So I'm going to wait for that to reach the all-time low for the year here. That's where the previous support. I think it will reach that point. I will buy more shares of this particular stock and bring it down. So by buying more shares, that line will drop closer, or midway at least. I'll be happy with that. The reason being, the potential for that to grow is much more. Look at all this space here, all these peaks and peaks, right? So essentially, if I can bring that down here, I don't think you'll go any further than that. It could do, it may do, it might do, But if it does, it does. I'll buy more. My aim is when it drops to here, if I can bring my purchase price down to somewhere here, then when it goes up, even if it goes up to this point, I'll make a silly return, literally a silly return on it. So for me, this stock is like a low risk, high reward stock. Similarly, Pfizer is a low risk, high reward stock, purely because look at my position. My position is close to that current price, so it's a low risk, high reward stock. I don't think it will go further. I think it's pretty much the bottom. I was thinking of purchasing more, but I think my position is quite safe, so I'll hold it instead, put money elsewhere. And like as I was saying to you, it's because I invested into too many stocks, I'm not able to put more money into other stocks like PayPal to bring that overall deficit down. So it's deficit of, at the moment, it's a deficit of 10%. So ideally, I would have liked to have purchased more into this particular stock because I think this is a good stock for future. Now, if I bought more shares, I would have brought that line down. By doing so, when it goes up, it's likely to go into profit quicker, and two, I'm likely to make more profit. But like I said, because I got too many stocks, my money is spread across too much. The lesson is that I over diversified it. So over diversified it. Another thing is that in the future, what I will do is, instead of buying, for example, Etsy and eBay and Shopify, essentially they're all the same thing, really, aren't they? So I could have just purchased one of these instead of Etsy, eBay, JD, Shopify, and whatnot. That's I'm buying, essentially I bought 1, 2, 3, 4 shares within the same field from the same market. And by doing that, yes, I got 235 here, 36 there. I have £100 on JD. I have 350 on Etsy, and I have about 200 something 50 on Shopify. Yeah, I've got a good chunk of money in all of those. But the problem is, if I bought 1 or 2, for example, then I could have afforded to, spread the rest of the money into these stocks by bringing them down more. Because another thing that I don't do is I don't go in and buy shares straight away. I'll buy them as they drop, and then I'll buy more and more. By doing that, you can keep an eye on it. But again, that's another share, Etsy. I'm happy to hold it where it is. It's a safe position for me. It's, even though where it is now is all year low. It could go up or it could go down further. But like I said, if I didn't invest into, say, eBay or JD, for example, then I could have chucked more money into that stock, and I could have brought that bar down. Then the return would have been greater. So the lesson is that in the future, I shouldn't really go after similar stocks. Coca-Cola, I went for that, even though I got Pepsi as well. They're both going down. I only bought them because I know they're stable stocks, so hence the reason why I bought them. If they go down, I'll purchase more shares. No problem with that. Yeah, so I think you can over diversify things. Definitely, you can over diversify stocks, and also planning an exit route is actually quite sensible. So what I'm going to start doing is, I'm going to start, like Nvidia, for example, as soon as it reaches 3% mark, I'm going to pull out some money on that. Same with Oracle. It was a negative last week, even last few days, on 1.36 up now. So yeah, as soon as it goes up a bit, I'm going to start putting money out. And what I will do is I'll use those amount into stocks like, I'll probably get, if JD remains down, I'll buy more of JD. But at the moment, I'm going to focus on Apple. So what I want to do is buy more shares of Apple, and then bring that bar down from here to closer to the current line. Now, if I can do that, it's going to well, long in the long run, it will be more profitable, and this is a safe stock. It's a blue chip company, so that's the thought process behind behind me at the moment because of bear market. And like I said, is because I'm playing with my own money. My thought process is a lot different than if I was playing with demo account, because you don't understand certain things until you face them yourselves. Certain psychological change of mental state. And yeah, as it stands, I'm okay, I'm good, I'm safe. I don't think any of my stocks are extremely dangerous. They're stable. The whole market's on its knees, so it's understandable that they are certain stocks like mini supermarket, they're experimental stocks. Yeah, so Neo's another, Neo actually previously it has gained me a substantial amount of profit. So I do like that stock, but again, because I'm now going to be limited with the amount of money I can afford to chuck into stock trading, I might just like free up money from here, free up money from Oracle, free up money from maybe Palo Alto when it goes into a bit of profit, and then you know um, essentially distribute that money into other stocks where I think it's going to be best used. For one reason is to reduce the risk factors, and to also profitability. So that's what I'm doing at the moment.